If you own a home, you probably assume your homeowner's policy has you covered until the day you file a claim and discover a painful surprise. The truth is that many policies look similar on the surface, but the biggest differences live in the exclusions, the limits, and the fine print. In this video, you will learn the most common hidden coverage gaps, how they can cost you thousands, and how to compare policies like a professional. Start with the core question: what does your policy actually insure? Most homeowners' policies cover the structure, your personal property, liability, and additional living expenses. That sounds complete, but coverage only applies to specific causes of loss, and only up to certain limits, with certain rules. The gaps begin when you assume something is included, but the policy treats it as excluded, limited, or conditional. Gap 1. Water damage confusion. Many homeowners hear water damage and think flooding, but insurers split water losses into categories. Sudden and accidental damage from a burst pipe is often covered. Water that backs up through sewers or drains is often excluded unless you add a water backup endorsement. And flood damage, meaning water rising from outside the home, is almost always excluded and requires a separate flood policy. One heavy storm can trigger all three kinds of water problems. If your basement fills from outside water, your standard policy may pay nothing. If your drain line backs up and you do not have the endorsement, you may get a denial or a very small payout. These are the kinds of gaps that turn a few $100s a year in extra protection into a five-figure loss. Gap 2. Underinsured replacement cost. A common mistake is assuming your dwelling limit equals what it would cost to rebuild. Market value and rebuild cost are not the same. Rebuild cost depends on labor, materials, code requirements, debris removal, and the type of construction. After regional disasters, labor and materials spike, and rebuild costs jump fast. If your dwelling limit is too low, the insurer will cap payment at your limit, and you pay the rest. Some policies offer extended replacement cost, which can add a buffer above the dwelling limit. Others do not. If you want the best homeowners insurance, look for strong rebuild protection, realistic valuation, and a reputable carrier that updates estimates regularly. Gap 3. Roof coverage traps. Roof claims are one of the biggest battlegrounds in homeowners insurance today. Some policies pay full replacement cost for the roof, others pay actual cash value, which subtracts depreciation. A roof that is 15 years old may be valued far lower than the cost to replace it, leaving you with a major out-of-pocket bill. Some insurers also apply separate wind or hail deductibles, often a percentage of the dwelling limit. A 2% deductible on a $400,000 dwelling is $8,000 before insurance pays $1. If you live in a wind or hail-prone area, this matters more than the headline premium. Gap 4. Personal property limits that do not match real life. Your policy may say personal property is covered, but it may cap categories like jewelry, watches, cash, firearms, collectibles, and electronics. A policy might cover theft, but limit jewelry losses to a small amount unless you schedule items separately. If you have high-value items, the best approach is scheduling or adding a rider with appraisals. Without it, you can lose thousands even when the claim is approved. Gap 5. Special exclusions for wear, neglect, and repeated seepage. Many claims fail because the insurer argues the damage happened over time. Policies typically exclude deterioration, mold, rot, and gradual leaks. They may also exclude repeated seepage over a period of weeks or months. That means a slow leak behind a wall can create massive damage, and the insurer may deny most of it. The practical solution is routine maintenance, quick repairs and documentation. Also consider limited mold coverage endorsements if they are available and cost-effective. Gap 6. Ordinance and law. The code upgrade gap. After a major loss, you might be required to rebuild to current building codes. That can mean upgraded electrical, plumbing, roof fastening, fire protection, or elevation requirements. Standard dwelling coverage may not pay for these additional code-driven costs. This is where ordinance or law coverage matters. Without it, you can be forced to pay the code upgrade costs yourself, and those costs can be enormous. Gap 7. Additional living expenses limits and time limits. If your home is unlivable, your policy may cover hotel stays, temporary rent, and certain extra costs. But there are often limits on both dollars and duration, and there may be stricter rules about what qualifies. In a widespread disaster, finding housing is more expensive and takes longer. If your limits are low, you could be forced to return before repairs are complete or pay for housing on your own. Gap 8. Liability gaps that show up after an accident. Liability coverage helps if someone is injured on your property or you are found responsible for damage. But certain activities or risks may be excluded, like certain breeds of dogs, trampolines, aggressive animals, or home business activities. If you run any kind of business from home, even part-time, you should confirm what is covered. Many people assume their homeowner's policy covers everything, then discover they needed a home business endorsement or a separate policy. Gap 9. Wildfire, hurricane, and high-risk area restrictions. In some regions, insurers use special deductibles, lower limits, tighter underwriting, and more exclusions for catastrophe-related losses. Some policies exclude certain perils unless you buy separate coverage, and some carriers limit availability or non-renew policies after claims. The best homeowners insurance is not always the cheapest. It is the one that stays in force, pays fairly, and matches the real risks where you live. So how do you choose the best homeowners insurance in the US? Use the simple checklist. First, confirm the dwelling limit is based on rebuild cost, not market price. Second, look for replacement cost on the dwelling and ideally extended replacement cost, if available and affordable. Third, confirm roof settlement, whether it is replacement cost or actual cash value, and check wind and hail deductibles. Fourth, verify water backup coverage and consider flood coverage if you have any meaningful flood exposure. Fifth, review personal property limits and schedule high-value items. Sixth, add ordinance and law coverage to protect against code upgrade costs. Seventh, review additional living expenses limits and make sure they are realistic for your area. Eighth, review liability limits and consider an umbrella policy if you have assets to protect. Ninth, read exclusions and ask questions, especially about mold, seepage, and maintenance-related denials.